Hi Robuxio traders, welcome again to our new market update. In this one we will firstly check current market conditions and then we will look at profit targets, why we are not using them and why it is not a good idea to use them in general with most trend strategies. Okay, so firstly to our current conditions. You know that we are moving sideways on our accounts for a few months and it is perfectly normal. In fact, it will be happening all the time, especially in conditions that are similar to those we are right now. Because look at this chart. You can see here ATR, which is giving us the information about current market volatility. It is basically giving us the information what is the average size of the daily bar, and the lower the worse for sure for us because we love volatility as traders. And Kaufman efficiency ratio or KER is telling us how the market is trending, which basically means that if the market is moving like this, KER is above zero point 0.5, even close to 1. And if it is going sideways, the KER is below zero point 0.5, which is basically telling us that there is no trend in the market. And right now, what we can see is that the volatility, the daily volatility of total crypto market is close to 4-month low, but the trendiness is even worse than it was at the start of February, because you can see it even here. If the volatility was that low last time, the market was at least moving to one side. But right now, the market is not moving at all. We are basically going sideways. We are going sideways since April, but with very low volatility. And the volatility was that low also, for example, in November 2023, you can see it here. But again, the market was trending with this volatility. You can see that the Kaufman efficiency ratio was showing us that there were trends in the market. You can see it also here on the chart. Why I'm showing it to you is to understand that it is always about market environment. Our solution is made that way that we are covering risks and we are trying to extract profits from trendiness, volatility, and inefficiencies. But in this environment, we can only extract profit from inefficiencies, not from trendiness, and not that much from volatility, because volatility is basically not in the market. You can see it in our trend strategies. And this is, by the way, also the reason why it is that hard to trade trend strategies only, because they have periods when market is going sideways with low volatility and you cannot make money. Quite contrary, you are usually losing money in these periods. So trend strategies are great. They will make us a lot of money, much more than mean reversion strategies. But trends are happening only from time to time. Trends are usually not in the market for longer period. They just appear for a week to 3 weeks and then again they disappear and we cannot make money from them. This is the reason why we trade mean reversion strategies too. Mean reversion strategies are basically making money in sideways markets, which is exactly the market we are trading in right now. And you can see it on the equity curve. You can see how these mean reversion strategies are really making money very stably. But compared to trend strategies, they don't deliver such a huge profits. You can see it here. So that's why we don't want to trade, for example, mean reversion strategies only, because the profit potential is much, much higher with trend strategies. But the mean reversion strategies are diversifier, and what you can see here on the equity curve of the whole portfolio is how much these mean reversion strategies are pushing the equity curve to lower drawdown, which is very important because over the long term, the lower the drawdown and the more stable the results, the more we can compound in these strong market phases when the market is really trending a lot. And if we will start from small drawdown only, we will take the advantage of it and we will push the equity much, much higher. So that's why we still have higher weight of trend strategies, because trend strategies are really the profit makers. Plus, mean reversion strategies have slightly different risks that trend strategies don't have. That's why the weight of mean reversion strategies have to be slightly lower, because you know that in the first case, we always want to cover risks. Just then we can talk about profit, because if you are not covering risks in the first place, then you usually lose your account and you cannot participate on these long and strong trends that will always appear in the market. We just have to wait for it a bit. Now to the question about profit targets, because we still have questions why we are not using profit targets, and that if we would use profit targets, especially in these periods, we would make more money on trend strategies. And it's logical, because if the market is not trending and it is not that volatile, what is usually happening that there starts some price action. It seems like it starts trending, but then it reverts back to the mean. This is, by the way, the reason why our mean reversion strategies are making money in this environment. But it could seem very logic that we would enter, for example, here on a profit target. So let's see, we would say that we will exit the trade after 10% of profit, or 15% of profit, or 20% of profit, because then we won't get back to zero or even to a loss, which can happen and which is perfectly normal. But why we don't do it with our trend strategies? The main reason is that trend trading, which is basically trading when we enter a market and we are trying to stick with the market or with the coin as long as there is a trend until the trend stops. And you have to know that trend trading over the long term, for sure, over the long term, is about outliers hunting. What it means, you can see it on this chart. This chart is showing us the best open profit during every trade with our momentum catcher breakout strategy. You can see that sometimes you get MFE, or maximum open profit, of up to 200%, 75, 80, again above 50%, 75% again. You get these open profits from which you will make the most money. And once you say, okay, let's use 10% profit target, you are right that your win rate will be much higher. Compared here, if we would use 10% profit target, our win rate would be about 56%, which means that in 56% of the time, we would end up in profit or with a winning trade. compare it to our solution that doesn't use any profit target at all, our win rate is 46%, which is almost 20% lower, but but the performance of 10% profit target is less than 65% lower compared to our solution, which is not using the profit target at all. Of course, there are disadvantages if you don't trade with a profit target. And the main disadvantage is that your equity curve is slightly more volatile. You can see it, for example, here compared to here. But volatility over the long term for us is benefit. We just have to be patient and we need to understand the market, because market doesn't care about our profit targets. Market doesn't care that we want to make 10-20% of the movement. Market just moves, and sometimes market moves a lot, and sometimes market doesn't move that much. And we never know before. If we would know, then we wouldn't have to trade, we just could bet basically. But what you can see also on this chart, which means how many times a target gets hit, that the higher the profit target, the lower the percentage of the hits of the profit target. For example, if we would use 50% profit target, our target would get hit only 5% of the time, which basically means that the profit target is almost useless, and it is nothing but another parameter that would exponentially advance our strategies, which is something we don't want. We need our strategies to be simple to survive the changing market environment, which will be definitely in crypto in following years. So our solution is about simplicity on the single strategy level, which means that our strategies are simple, and that way they can make money in very different market environment. But on the portfolio level, we are very, very advanced, and we are putting together many strategies: mean reversion one, trend strategies, momentum strategies. And that way, even in this not that good market environment, we are able to keep the drawdown pretty low, and we just wait for the volatility to arise. And once the volatility will be high again and the market will be trending a lot again, we will get to these 200% open profits, 100% open profits, and we won't care about profit targets at all again. So just keep in mind that profit targets usually use traders that don't know the market statistics in general, and it is usually not the best way how to exit the market. Okay, this time it was slightly longer. You can let me know if you like these informational videos or this informational part of our market update. Of course, again, if you have any questions, just let me know, please. I'm always happy to answer everything. Have a great day. Bye.